Oh, we made the chair.
Yeah, look at that. Hi, guys.
Good afternoon, everyone. And it is that time of the month.
It is stat time of the
It's that time of the month. Where we do the stats.
Yes.
And, it's so stupid. Anyway, I just do something. Sometimes I just, I'm not thinking today. Too many things. You know what it is? It's the Red Bull before I came on.
Oh, yeah, no, you're just like, your brain's all over the place.
Okay. So anyway, we'll tell you why we're here, which is the stats. We do this once a month for you guys, because you guys are always entertained by stats. I know it's like the most, when I think when people were in high school, they look forward to this.
Oh, yeah.
Did you even, you hated math,
I
right?
did.
You were just like the worst at math. Not the worst at math, but
No, I was the worst at math.
Yeah? I wasn't the greatest either. But when it came to real estate, I became a connoisseur of numbers. I got so interested in stats that it was like, I get excited for these sheets of paper, actually. And that was really the...
No, they're interesting to look at.
Yeah, they are.
Yeah.
But, so...
Your iPad.
What about it?
No, you don't have it right now.
Oh, I forgot. Sorry, guys. It's a good thing. I think it's a good thing. Because at least now I know that you won't be staring at the comments and getting out of your... She gets out of her lane. She'll cross out. And she'll basically lose focus and then pay attention to the comments the rest of the time. So we're on 3 devices.
Yes, we
You
are.
can believe it. So left, right, center. Facebook, YouTube.
And TikTok.
Anyway, and our prayers go out to the people in Florida who are going experiencing
the hurricane.
the hurricane. What's the name of it?
Milton. Yes.
Milton. What a name for a hurricane.
Hurricane Milton. Yeah.
That's not something you want to be destroyed by.
Really not.
By someone named Milton.
Yeah.
It doesn't sound too intimidating.
No, it doesn't.
But
yes.
they always, I don't know, each year they come out with the names. But it's a pretty, I think the last report things have kind of gotten a little bit better. Not great, and I think everybody should be prepared, but I think it's a little bit better than like what yesterday's track looked like.
Yeah.
It was good. Oh, you gotta excuse the phone there for a second. that'll go into the service.
Right.
But, so anyway, we're going to get into these stats, a couple of numbers of note. I'm, to be honest with you, I'm just as new to these numbers as you are this month. Usually I take a day or two to absorb them. We're doing this on the fly. But since I have experience in doing this like as a regular, I can just look at everything and give you a good synopsis of what's taking place in the Monmouth County and Ocean County regions.
Yes.
Was this Staten Island?
This is Staten Island.
Oh, I'm sorry. I think I have it on Facebook as
yeah.
Okay, Staten Island. Sorry, folks. That's my head is an absolute. It's in because we're going to Manasquan tomorrow. My head is in New Jersey.
Yeah.
So it's like,
it's okay. I think we can fix it later.
Yeah, we can fix it later. And I actually have like NJ in the hashtags.
Oh my god.
It's really bad. But anyway, well, fortunately with YouTube it goes up later.
Yes.
But anyway, we're gonna go to Staten Island.
Yes.
So this is the Staten Island stats.
Staten Island stats for
Get it together.
September.
Yes. Get it together. I have a gold pen because it's a golden month for real estate in Staten Island. I'm sure.
Yeah.
The numbers probably quite interesting.
Yeah.
But let's see what's going on. So let's go through the rundown. I will be putting on my glasses, which I'm trying to defog.
Yes.
So you can start reading because I can't see.
Okay. Luckily, I have my contacts in.
She has a contact. So. I have my glasses. I hate wearing glasses, especially these. Okay. Now we can see.
Alrighty. So I always start with the days on the market. So the average days on the market are actually down both year over year and month over month. So year over year, it's down 10.30%. and month over month, it's down about 8%. So this month it's at 61 days.
Or the days on the market.
Yeah.
Mm-hmm. So basically, it's a 10% lower days on the market than it was a year ago.
Yeah.
Month's inventory is also down, right?
Yeah, the month's inventory is down both year over year, month over month too.
Why I'm saying that is that they kind of coalesce and coincide with one another.
Yes.
So basically, what's on the market is selling. That doesn't mean that everybody's selling, but it means that people are selling, and it means that what's really happening is there was really no relief in sight for. I had some early predictions that maybe the market would come down a bit, and it's kind of interesting because of the fact that the Fed lowered the rate in September 16th, and consequently, and this goes to show you can't necessarily go base mortgage rates on the Fed fund rate. Fed fund rate is actually lower than the 10-year Treasury, which is significantly lower than the 10-year Treasury. There's been a spread. So the 10-year Treasury, which is what mortgages are based on, has gone up. So mortgage rates are actually up, even though the Fed has brought the rates down. It's gone up, I think, consecutively on consecutive days for I believe the last 6 days or 7 days, where it's actually 10-year Treasuries, which is now, it was under 3%. It was like 3.87 at the low, and then it's up about 4.08%, almost 0.1%. So I hate using getting too give verbal jargon on data. 0.1%. Like anybody knows what the heck that means.
Yeah. 0.1%.
Do you know what that means? Yes. No, I'm only kidding.
Okay.
Don't answer.
I shouldn't
Don't
answer it.
No.
So, do you think with the inventory decreasing, do you feel it's becoming more of a seller's market right now?
I mean, I always look at it from the standpoint of months inventory and sales. Months inventory, 6 being, so a year ago it was at 4.86, so it was approaching.
Mm-hmm.
Houses were staying on the market longer a year ago. It's down 18%.
Yeah.
Because interest rates have kind of went down lower than they were a year ago, substantially. So as soon as that's happened, months inventory shot down again. So there's no relief in sight for home affordability in that sense. I don't see it.
Mm-hmm.
This is not. So consequently, no, we are very much in the throes of a seller's market in terms of months inventory. Volumes are extremely low though. But this is one of the things about this market that has kind of confounded most of the perception of what markets are doing. People assume that the rates, that as high as they were, would really dampen prices. That has not happened at all. Mm-hmm. Not 1 ounce. So I think that we're seriously looking at a real drop off in terms of the expectation that prices will come down at all. The next 6, 8, 10 months, I don't see it here. If 18% year-over-year difference lower of houses available for sale, at least locally, and but sold transactions are up 10% from a year ago. So it has really, but you'll get into that.
Yeah. Okay. So the next thing is the sale to list price is also down both year over year and month over month. Year over year it's down 0.30% and month over month it's down 0.80%.
Yeah, 0.3% and 0.8%. So sales to list price ratios have gone down. Mm-hmm. It's hard to say, to give you an exact figure on what that should look like, because what I'm going to say is when you look at sales to list price ratio, usually when you have an ascending market, people tend to price their houses higher and higher and higher. And what consequently happens is they don't kind of realize the market potential. Because one of the things that the data has pointed out, especially I'm not going to say locally, we don't have that data here available, but nationally, this year was 2004, like 2003 to 2004, like a span of running 12 months. This has been the highest amount of price decreases in the market in a while.
Mm-hmm.
So I think that's pretty consequential. So people are a little bit more forgiving on the numbers because when you look at the average new listing price, you'll see that's up 12%, which I'm sure, I don't know if you'll get into that, but because that's a deep number. New average listing price is up 12.17.
Yeah.
So because the people are listing higher, they're a little ahead of the market. So they are coming down just a smidgen. It is down 0.3%, negligible. But while things were a little bit dicier last year, but there's another thing that blares out to me in this report.
Yeah.
But you keep going, and I'll get into those details later.
So the sold medium listing is up year over year, like 3%, and it's down, and it's also and it's also up month over month, about 1%.
On the sold median sale price is now at
Listing.
Yeah, the sold median listing is 777. So people are going up in value. The sold so people are like the sold average listing is up. What are you seeing this?
I was the sold medium listing.
Oh, there you go.
Yes.
Okay, sorry.
But the sold average listing is also up year over year.
700,000.
Yeah.
I would go with that number. Sold median sale price. Sold median listing, meaning that listings, what their list price is when the offer was made and accepted into contract on. So it's important to kind of delineate the two between sold median listing and sold median sale. Sold median listing, sold median sale. 707, which coincides with the fact that, we always look at the sold median listing to track like what people are doing once their house gets on the market, like where it's going.
Yeah.
And like you can kind of hedge where people, and like if you see the sold median listing going up and you see the sold median sale price going up at the same time, you basically get a forward-looking indicator as to like where the market's trajectory is, which now appears like, it seems to be going higher. Mm-hmm. And there's a big number here that is substantial enough to notice again, which is an inventory situation. It's just yeah, inventory, and like we could sense this. I could always feel this here. But that's another story. October's notoriously slow.
Yeah. These are September.
Yeah, I know, but as we go into the next few months, notoriously slow, as slow as you could get based upon these latest numbers. Sold, pending sales too. All these things, they're showing some signs. September is not like a robust month for closings either, but the year-over-year difference is it's changing a little bit. But you keep going. I don't want to disturb your flow.
No.
I'm always disturbing the flow here.
No.
Of where we're supposed to be.
No. No. Good. Oh. I just banged into the tree.
Is that? She's just. What are you doing?
What? I had soda before this.
You had soda? What does that mean? So that means that you're going to be extra excited? I had Red Bull before I came on, so what's my excuse? Besides maybe like glitching out on camera. But yeah, so I'm going to let you go and then I'll give an overall. So, because I tend to just go off. I've done my sense in checking myself now to say, let me limit my conversation. I get a little long-winded. Go ahead.
Okay, so the pending average listings are up year over year, about 5%, and it's also up about 0.5% month over month.
Yeah, all leading to the fact that so we're going to see the pending average listen, just to give you like a breakdown of the whole thing, is that 777,000 is the pending average listing. So the houses that are in contract right now pending average at 777,000, which pending average of 788,000.
Yeah.
Not seven. That's so. This is again showing that there's still appreciation going on here. The year-over-year difference, 5%. So the pending average listing sale, the pending listing, again, we don't know until it closes exactly where the number's going, but where we're going to look for is a trend develops in pendings to say, okay, is the market shifting upward or downward based on the fact that we're seeing like higher price listings actually selling. Got the whole thing from going. That goes to service. Okay.
Yes. And the new average listings are up year over year 12%, and up month over month 5%.
The new average
listings.
People keep going up on their price.
Yep.
Every month it gets higher and higher.
They do.
The expectations keep going. They're skyrocketing. I mean, it's so much in the way of skyrocketing expectations that, and yeah, folks, I don't see that changing. I'm going to tell you, very loose money supply right now. You may not notice it on your end, but nobody really notices on the average people end. But on the, there's big. Wall Street's doing exceptionally well. Home prices are doing, hard assets are doing well, including Bitcoin. But we're definitely looking at numbers considering everything that we're seeing here, especially with those pending average listing and pending average the sold average listings. They're still on the increase substantially.
Yes.
So 12% on the new average listings. That would be right.
Yes. Yeah.
So people are up 12%. So from a year ago. There's nothing to say about that.
Nope. There is not.
I just saw a text. I missed it.
Yeah.
Sometimes I get news flashes on the screen.
Yes, I saw that too.
Was it bad?
I don't know.
I didn't catch it. I didn't catch that. But we'll see.
So yeah, the sold average sale is up year over year, and month over month it's up too.
Nothing out of line. Again, the sold average sale price, I don't like to look at sold average sales price, especially with volumes like these, because you can get anomalies, but the median sale, the sold average sale is 754,000 and the median sold is 700. The high end of the market is doing exceptionally well.
Yeah.
One of the most unusual things about this market is the tale of two real estate markets taking place. And some people have suggested that it's been a very big boon for high-end real estate buyers. It's one of the most, and still remains robust, considering everything involving real estate being low inventory. People that are actually buying are at the higher end of the spectrum. Mm-hmm. And that has a lot to do with the fact that Wall Street continues its rapid ascent. So anybody who bought NVIDIA stocks is looking for a house now. I won't say that I had a good share of it at one time, but I sold early. Never sell early.
No.
I missed out on the great NVIDIA one.
So did I.
You don't even,
I don't even
she
have
doesn't even pay
anything.
attention. I try to talk stocks with her, and she's like, "No, I don't want to bother."
I can't get into it.
I just put in my savings account for 4%. I go. I have these questions all the time. It's like, guys, you should be in. I mean, 4%. I guess it's safe. I'm not one to tell. I'm not here for financial advice.
No.
I give that personally in my travels.
No, you're good with all that stuff.
In my
Yes. Sorry.
my life, not mine. I agree with you. I'm big on it.
Yeah. No, you're good.
A lot of people they look at short. They look at short everything in a lens of 3 months. Like when you first invest, you usually go like this. It's like, oh, everybody's jumping in. Time always works in your favor when it comes to all the right investments. So,
Yes.
including real estate. Real estate never, regardless of where things go, everybody tries to time. And I hate to say this, there are people last year says, "Oh wait, prices are coming down." This is what I mean. Do not time this stuff.
Yeah.
I have had this prediction, and now I don't want to say how long I've been doing this. It shouldn't tell. It should tell. Maybe it doesn't. Maybe I don't look like I've been doing this as long. I'm fishing for compliments.
No, you can't.
But anyway, I do want to tell you that at the end of the day, I think people will try to go into the market and say, "Let me time this out correctly." And now, as of this report, you're already 5% in the hole. So, and this is what I tell to people like Carrie, right? Carrie turns around, she puts her money in savings account at 4%, but the appreciation of real estate's at 5%. So she lost 1% of her possible savings on a house, which is gaining more value than her savings account.
Wow.
And it's kind of put that into perspective. That's why, that's why I said real estate is obviously, I think we've seen a taming of you're not going to see values increase further from here. I don't think you're going to see the kind of acceleration. I don't see that on the upper side, but I definitely see it I would say on average, you could expect, based on everything that I see here, the volumes are still low, that you could expect somewhere around 5%. 5% a year, I think now. I think that should be pretty much, it looks like everything is kind of stabilized at a 5% appreciation rate on real estate right now. There is no indications here. And I'm sure you're getting into the last number, which is, again, way down.
Yes. The
active listings.
The active listings. Yeah, so the active listings are down year over year and month over month. Year over year, it's down 10%, and month over month, it's down about 4%.
Yes. So again, active listings continuously and precipitously drop. Just so you know, for the record, there are some, and I just want to say for the record, on a lot of this data, on a lot of the data points that we're talking about, we are basically saying that, because we're covering Staten Island MLS, which actually has some New Jersey in it now, because we actually do New Jersey in our.
Oh yeah.
So it has some of those data and some other boroughs, including Brooklyn. So some of the data could be a little bit not 100% Staten Island.
Mm-hmm.
This is actually from Staten Island MLS, from the complete. That's why some of our numbers may look off. I realize that the data set that's printed out by the MLS gives out a report. It's Staten Island centric.
Yeah.
We're incorporating a little bit of some of the other boroughs that are involved with the sales. This is raw data that we're using, so it's a little bit different.
Yeah, you're right.
But you notice that you notice that there's a little discrepancy, and I kind of looked into it, and the bottom line is, it is based upon the fact that we have data from other boroughs and states.
Yes. No, that's good. Yeah, because we have done that before.
Yeah, we advertise. We put our New Jersey listings in New York side on that MLS. Most of them anyway, not 100%. I don't think it's all of them, but most.
Yeah. So next we have is the new listings. So new listings are actually up also. They're up about 7% year over year and up about 8% month over month for new listings. Here.
Yeah, I see it. Makes no sense whatsoever. So active listings are down, new listings are up. So maybe the inventory fill. How many sold listings? 350, 360. These are numbers so I'm looking at month over month difference in sold listings. Some of the numbers here are a little disjointed. Sold listings, so new listings are up a bit. And that means the houses that just came up on the market is up from a year ago, even though the active listings are down. So more people in the last month have decided to put their house on the market. Maybe they realize that there is some. I think people, because of the rate drop, people decided they thought the Fed fund rate would drop, and it did happen, but mortgage rates didn't. And one of the big caveats for people moving, this has been our take on this, because we deal with the public quite considerably, is they put together an idea in their head that if I'm going to move, I want to move into at least an interest rate environment that's going to be like, I'm not going to be on the losing side. I don't want to give up a 4% for a 6%. So if it goes down to 5.5, I'm willing to take that risk and go out and buy something else to move up. But there's like a teetering point. So I guess with the expectation that rates came down, the Fed fund rate came down, but not interest rates. And that's really, it's actually went the other direction. That's interesting to say. There must be some sense, because whether it's a lack of demand for treasury bills, which it could be the case, based on all the craziness of the world today, that people aren't purchasing treasury. So what's happening is the yields are going up. So while people there's an expectation of inflation moving forward. So what the Fed fund rate cut, I think there's some people who are in the treasury market now, which influences, I was talking about treasury because it influences the mortgage rate. So with the treasuries falling off, not falling off, moving up in yields, meaning that there's selling pressure. So there's some indication that, people that are big into bonds are fearing that recession may show up again. So they're they're selling off bonds with the idea that inflation, maybe based on the latest Fed fund rate hike, may reaccelerate. And by all standards, we have a problem. We have a big problem because the national debt level's up. This is a tough one to navigate, but we're not here to do a deep dive into the national debt and how that's going to be resolved through treasury notes. But anyway, go on to the next thing.
The pending listings. So the pending listings are up year over year 2%, but they're down month over month 14%.
Seasonally adjusted, it's normal. Nothing month over month difference between August and September. I mean, September is generally a fall off month. For stats as far as pendings are concerned. So 15% decrease in pendings, nothing out of the ordinary, seasonally adjusted. 2% year over year, still showing that there's more pending listings this year than there were a year ago. Obviously, it's reflected in the sales data as well, because sold listings this year are up 10%. Year over year, and month over month. Sold listings are down 3%. Month over month, but seasonally adjusted, nothing to speak of there. There's nothing there. It's been it's been flat. And that the report indicates like a very slow, steady increase without any. It doesn't look like to be a break. So I think any talk of prices going down at this point. Based on everything I hear, there's going to be another Fed meeting in November. We expect to drop. Some people are saying another 0.5%. it's between 0.5% and 0.25%. It's just going to be an interesting time in November anyway. So I'm sure whatever craziness will occur in November.
Oh yeah.
Yeah. So let's see what happens. I could only say to you that we have to see what happens. It's a month to month. At this point, I don't like to project too far if interest rates are coming down. You hear something over there?
Yeah, I hear like creeping.
Yeah, it's the ghost.
No.
Is that your cat?
I wish.
Came to visit.
I wish it was my cat.
Anyway, what's next? That's
all the numbers. Yeah.
Now I get to ask you questions?
Yeah.
Oh no.
What kind of question?
You ask Kerry questions? Anybody have any questions? No, I'm only kidding. You're not. Forget about it. But anyway, so as a synopsis, to kind of wrap this up for you because we get into individual numbers, I want to just point out a few blaring things in here. Is the synopsis of everything between pending, new average pending listing, new average listing. There seems to be still a decent seller's market ahead. Where the biggest thing I see, obviously, geopolitical climate overall, even here, may have influences on what may happen with real estate as a general. I don't think it's going to be anything drastic based on everything I see now. But obviously, we have to wait and see. The biggest thing moving into, as we started to close this year out in the final quarter 4, so the fourth quarter, we're starting to see things. They were bouncing up and down for a little bit. We were going month to month when the Fed fund rate was really high and interest rates were close to 8%. We see these bobbles in the market that was just like we gyrate month to month. February this past year was downright awful in terms of like volumes of sales, rates close to 8%. It was a breaking point, and that seems to be the big thing that I'm taking away from the 3 quarters of this year going into the fourth quarter is rates being, I say, under 6.5%, which I've said in other lives, seems to be the breakneck for the market.
Yeah.
So if we see things tail off, usually they go on above 6.5% mortgage rates, and if they go below, things pretty much, they'll stay steady. And it's a steady, we've been on a steady incline now here. It's about 3 consecutive months, which I say is a trend. I always say 3 is a trend. If you go a quarter, it's a trend. It's trended upward in Staten Island. And people, that does not, like we get into this thing and people say, oh, the market's great, so let me overprice things by, 17% over the market value. And, because the things are trending up, you have to be realistic about what that expectation is. 5%, 4% is on a year. And that's what we have in the data, so it's over a year's time. But like I said, it's slow. It's not anything that you're going to see a drastic swing either way. But I'm sure when we get to New Jersey stats, which I mistakenly called this at the beginning.
Yeah.
I'll follow.
We can probably fix
I'll
it.
go on an apology tour, giving the wrong location. But the big thing is that the Jersey end of the business is, it's going to look as good as this, if not better. But there are some markets in New Jersey that we'll be looking at. So I think there's some individual pinpoint locations. And one of the biggest places that we've seen increases, like in New Jersey, when we're talking about New Jersey next week, which is going to be, I always like to see, there's a few communities there that absolutely explode. Like in Monmouth County, you have Manalapan, Middlesex County of Old Bridge, which I've seen just extreme rises in value. You go across the state, to be honest with you, Somerset County too. It's just there's markets there that are just they're still very robust and they're still very good because of the low inventory situation. And like I said, if you're saving money at 4% and things are going up at 5%, you're losing the ability your purchasing power is decreasing on real estate. This is why I say people do not try to time this. And there's going to be 1,000 prognosticators on here. There's people who doom scroll real estate. The real estate business, we'll talk about the real estate business as being bad for the purposes of volume. Okay, because if you go on, a lot of things that people will say, oh well, being in the real estate business is horrible, blah blah blah, because volumes are historically low. We're talking about we're at 25-year lows as far as volume is concerned, which is anybody who's in the real estate business knows we're not paid based on the ups and downs of the market. We're paid based on the volume or the sales volume of the market. But these numbers are notoriously low. Even at the total sales numbers here, when you talk about 300s, we were talking close to 600. We're almost at 50% decline in the volume of sales just from 2021 to 2022, whereas like through the roof. We had close to 600 sales, now we're at 300. And last year, in I think February, it was down to under 200, or very close to it. But anyway, we're not looking at anybody who's going to beat the market. I can tell you this, you're not going to beat it. You're not going to beat the market. Anybody who's prognosticated this, and I've said this before, we give a basic analysis. I don't, based on the data we're talking about, doesn't look like anything substantial is going to happen. Now, it's also important to disclose. Not every neighborhood fares as well as others. This is more generalized, and each individual will have their own market within a community. So don't yawn at me, Carrie. It's not over yet. She's getting Red Bull. The next one. I'm going to make you hyper. She's hyper and tired at the same time. She's the only person in the world who can be hyper. Can't sit still, but she can yawn.
Yeah, I know. Imagine.
You're the most active, tired person I know.
It's true.
It's like she fidgets a lot. Look, she plays with her hair. I'm going to call you out. I told you I was going to do that the next time we're on.
You did.
Yeah. Her hair looks fine, folks. Tell her.
I'm not. Thanks.
I'm going to make the TikTok audience start making comments.
No.
But anyway, the bottom line is that each individual market plays a substantial role in whether prices are really appreciating or maybe even decreasing in certain areas. So it's important to note that, but we'll see obviously what's going on in New Jersey next week.
Yes.
And we'll be down. We're very excited. We'll be heading down to the New Jersey shore.
Yes.
We are on the beach
Yeah.
in Monmouth County, and it's in Manasquan. Manasquan, yes, folks. That's I love that area.
No, it is really nice down there.
Have you been to Manasquan per se?
Probably.
Probably.
No, I have.
It's like
I'd be like, how can I not?
Carrie just goes with the breeze.
I
Our
do.
friends will take us someplace. We
Yeah,
don't even know
I
where.
think-
Where is this place? Oh, it's on the Jersey Shore.
Yeah.
Typical
That's kind of
Staten Island.
I probably have been there.
Geography. Isn't it's just they just go.
Yeah.
Is that how it goes?
Mhm.
They just go.
Yeah, but I do know a lot more places because of this stuff.
What do you mean?
Working here. New places.
Oh, new places.
Yeah.
I thought you said new phases.
No.
I was
new
like,
places.
really?
No.
Something I don't know? But anyway, that's our report. Hopefully, like I said, the people who are in Florida, we have a lot of New York transplants who live in that area. Good luck to you all. And, prayers are with you, and hopefully you've taken the right precautions, evacuated if necessary.
Mm-hmm.
This is going to get dicey there tonight. But like I said, from our standpoint, all's well, and we'll see you a week from Oh, we'll see you Friday now. Yes.
Did I miss it?
No, it was last week because it was skip a week. I don't know what's all about.
Yeah, I don't remember. Okay. Maybe see you Friday. Probably.
Maybe. Maybe earlier. You know, but anyway, that's what we have for you guys. Hopefully, if you have a question, go to either, if you're on YouTube, you could obviously leave a question there. Facebook remains there. And we look forward to seeing you next week.
Yep.
All right. And that's all we have for you today.
Yes.
And we'll see you, I think it's Friday, but we'll see.
Yes. We'll see you guys. Well.
Ciao.